Bitcoin at 2 trillion market cap is completely irrelevant for nation states being able to engage in war. We live in a world where there's about 1 quadrillion in total assets. So it's like 1,000 trillions. The US bond market is 36 trillion right now, 37 trillion. Global sovereign bond markets are, tens and tens of trillions, maybe 100 trillion. Global money supply is over 100 trillion. Bitcoin's a drop in the bucket, but it's at its current scale, it has very little impact on nation states. Nothing short of being like 10 times or more bigger would start to affect that.
Fiat currencies aren't collapsing overnight, but make no mistake, we're watching their slow decay. Central banks today aren't just fighting inflation, they're propping up governments, rescuing bond markets, and quietly funding perpetual wars. Every crisis becomes a reason to print more, expand the balance sheet, and erode the currency, all to preserve the regime. This is the hidden cost of empire. From the US to the UK to Japan, the system is designed to keep credit flowing, even if it means sacrificing the long-term value of your money. As Lyn Alden sharply points out, this isn't policy gone wrong, it's how fiat works by design. These currencies are backed not by gold or productivity, but by political necessity. And when that necessity is war or crisis, the money printer doesn't stop. That's where Bitcoin enters the picture, scarce, global, and immune to manipulation. At just a $2 trillion market cap, it's still early. But early doesn't mean irrelevant. Alden explains that once enough people opt out of fiat and choose Bitcoin, it begins to chip away at one of the core pillars of state power: control over money. The world doesn't need Bitcoin to start a war, but it might need Bitcoin to end this era of endless debt, inflation, and conflict. So today, we're diving deep into Lyn Alden's most urgent insights, and why Bitcoin's next 10x isn't just possible, it's long overdue. Before we jump in, make sure to like, subscribe, and turn on notifications, because what you're about to hear isn't hype. It's a clear-eyed breakdown of how the fiat system unravels, and how Bitcoin rises to replace it.
Modern age, the foundation of what fiat currency is the liability of a central bank. They're the foundational ledger that they currently run on. And they obviously control the size of that ledger. They normally increase it. They can occasionally decrease it. And so that's kind of their first purpose. And then the second purpose is they want to run that own ledger themselves rather than rely on a ledger they can't control, like gold or Bitcoin or something. Because if there's a problem with the amount of debt units in the system, then rather than letting the debt units go down, which can include government bonds, basically instead of letting them default or otherwise have a disorderly thing, they just print more units. And so that's still a key thing, is funding the sovereign. And we saw it, as recently as 2022 during the UK gilt crisis. They had a major problem with their bonds. And the central bank, Bank of England, they had a speech plan about balance sheet reduction, and they literally canceled it and increased their balance sheet to fix the bond market problem. And then, that was a temporary thing. They eventually went to balance sheet reduction after they kind of cleared the leverage out of the system and kind of bailed it out. But the point is, they can step in whenever there's disorderly bond issues, and they can kind of choose what is the release valve going to be. If the government's spending too much money, they can let yields go up. They can let kind of the bond vigilantes and supply and demand kind of, flail in the wind for a while. If it becomes too much of an issue.
This is how you buy and sell crypto the easy way, using eToro, one of the world's leading trading platforms. If you're new to crypto, eToro makes it super simple. Let me show you how I bought Solana in just a few taps. First, head to the search bar and type in Solana. Tap on it, then hit trade. I'm going to invest $10, that's the minimum. Now just hit buy and done. I now own Solana. Selling is just as easy. Go to portfolio, tap your Solana asset, then click close and confirm your sale. Super simple. That's how quick and beginner-friendly eToro is. But here's why I use eToro. Earn up to 4.3% interest on non-invested funds, 0% commission on stocks, and you can set up an account in just minutes. If you want to start your crypto journey, use my link in the description to sign up to eToro today and start trading.
Then they can step in and say, well, now we're going to put some of the release valve into the currency itself, because we're going to suppress yields. We're going to, print more base money to buy bonds, whatever they want to do. And so it gives them a lot of flexibility, which I argue is not a good thing. But that is, from their perspective, that is, one of the reasons they exist. And another thing is that they would deny that. So most central bankers, if you ask them, is one of the reasons you exist to fund the sovereign, almost always they would say no. It's an uncouth thing to say. Maybe some retired central bankers tend to be a little bit more flexible with how they
Open-minded,
say
yeah. Yeah.
things. Not all of them, but some of them. So they would deny that. They would go on about how, they're trying to run stable monetary policy. They want to make prices gradually more expensive year after year. And that's kind of their purpose. But behind the scenes, yeah, funding the sovereign is one of the apps, like the top
Mm.
2 or 3 things that they do. Well, before the kind of the modern era, so the post global financial crisis, they weren't necessarily funding the sovereign too much. Basically, after World War II ended, there's this long stretch we didn't really have a lot of central bank directly funding of the government. Instead, it was more like managing these private sector credit things. Now, the big criticism is that they cause those cycles as well. They're not just so anything has cycles to it. So even without a central bank, cycles do come and go. There's just kind of human herd behavior that happens and momentum shifts and things like that. But then from their perspective, they're trying to kind of be counter cyclical. They're trying to like stimulate during a downturn and kind of hold things down during a bubble. Uh, with the problem that their actions generally lead to the next bubble. So for example, after the dot-com bubble, well, actually in the middle of the dot-com bubble, when long-term capital management had an issue, they provided liquidity into the market. And then in addition, it was the upcoming Y2K issue, which is now 25 years ago, but people were worried about clocks, hitting 99 and going to 0 and causing an issue. So they were worried about outages and stuff. So they front ran liquidity into the market in the late 1990s. And that contributed to the dot-com bubble on the upside, combined with the exuberance of new technology and everything else. So they weren't the only cause, but they just poured some gasoline onto the already raging fire. And then as the recession happened and as the dot-com bubble melted and everything, in something like 2001, they came out and cut interest rates all the way down to 1%. And they inflated a property bubble, which then blew up,
Mhm.
7 years later. And so they end up being more pro-cyclical, I would argue, than counter-cyclical. I think a lot of it is the sacrifice of the long term for the short term, which again they wouldn't agree with. But basically, they're always kind of putting out the current fire. So it's like if there's a
Yeah.
recession, it's like
The
the main thing is
arsonist.
get out
Yeah.
of the recession. If it's too hot, it's like suppress it. And basically, what they're always trying to do is make sure that total credit keeps going up. In my recent talk at the Bitcoin conference, I pointed out that in like 100+ years of history, there's only been 5 down years in the amount of total credit in the U.S. 4 of them were in the Great Depression. One of them was a 1% drop in 2008, and they just find that completely like impossible. So they just jump in and make sure private credit's always going up, or the combination of private and public credit's always going up. So they're always trying to like pull forward stuff from the future. They're always trying to like, well, don't stop consuming because that's bad for the economy. It's like keep consuming. If consumption is too low, keep consuming. It's this kind of treadmill that they're always trying to keep the economy on. They would argue that the net positive of that is good, that the economy is faster because they're doing this, even they might have some flaws. Whereas critics, and I'd be more in the critic camp, even though I do try to steelman their argument to make sure I understand it, but the critic camp would be that it's more detrimental than not. And I think it ultimately comes down to most economists don't think that price controls are good. That the market should set prices, and what central banks do is they set the price of credit, and kind of more fundamentally the price of money, but basically the price of credit. And so their decisions, a small group of individuals, has rippling implications for the entire market. And every time they're wrong, that can affect millions of people. It's price control the most important thing.
For over a century, central banks have quietly financed the ambitions of empires, not through taxation, but through inflation. When governments need to fund wars or cover massive deficits, they don't ask citizens to foot the bill directly. Instead, they expand the balance sheet, quietly devaluing your savings while increasing state power. As Lyn Alden points out, fiat currency isn't neutral, it's engineered to serve political agendas, regardless of the economic or human cost. Most people still don't grasp the true cost of this system. Every newly printed dollar erodes trust. Every rate cut or bailout widens the wealth gap. Fiat rewards debt, punishes savers, and fuels endless cycles of conflict and crisis. And this is exactly why Bitcoin matters. It's not just an investment, but a rejection of monetary manipulation. With its fixed supply and decentralized structure, Bitcoin offers a monetary system that can't be weaponized or inflated into oblivion. As central banks double down on printing, Bitcoin continues to gain strength. It provides a lifeboat for those who refuse to be collateral damage in a rigged financial system. The question isn't if Bitcoin will disrupt the global monetary order, it's how soon.
We still too early in this journey, or what is your sort of belief there?
Oh yeah, Bitcoin at 2 trillion market cap is completely irrelevant for nation states being able to engage in war. We live in a world where there's about 1 quadrillion in total assets. So it's like 1,000 trillions. The US bond market is 36 trillion right now, 37 trillion. Global sovereign bond markets are, tens and tens of trillions, maybe 100 trillion. Global money supply is over 100 trillion. Bitcoin's a drop in the bucket. So right now, doesn't mean it's not solving a problem. I mean, if someone gets locked out of payment rails or they want to hold money that's not being debased, it's serving millions of people. But it's at its current scale, it has very little impact on nation states. Nothing short of being like 10 times or more bigger would start to affect that. Basically, when a meaningful percentage of the population would rather hold Bitcoin than hold a fiat currency, that's when it starts to matter. When it starts actually taking away seigniorage from the nation state, which doesn't happen at a $2 trillion market cap today. That's 0.2% of global assets. You need to start getting into the whole integers, at least. I mean, ideally double-digit integers. So basically, until it's kind of like a new foundational type of money at scale, then yeah, it's a different discussion. And these things inherently take time. But you're going against an absolutely massive network effect. This is both a self-sustaining network effect, and then it's also a nation-state endorsed network effect. So it's absolutely massive. And this like open source network has to bootstrap from zero, and to the extent it's successful, it's going to take a very long time, and it can even take so long that people have to just kind of grow up with it, and it's around rather than making the active decision to transfer to it. One thing I like to reference is Jeff Booth. He often phrases things as if Bitcoin stays decentralized and secure, which is basically, so we're 16 years in this technology. It's been tested in multiple ways. It's very anti-fragile, but it's not necessarily invincible. So to the extent that Bitcoin as a network is not kind of corrupted, captured, neutered in some way, as long as it just kind of keeps functioning the way it has been, I expect it to keep taking market share up to a very high level, because it's as fast as fiat currency, but harder than gold, as long as, again, it continues to operate the way we expect it to. And so I do think that eventually it does eat into major nation state seigniorage, whether it's 100%, like it just completely invalidates the existence of fiat currency, or if it takes like half of it away by basically constraining them more, by giving them a much faster alternative that people can go to. That remains to be seen. We already, the closest thing we have today is like dollarization. So if a country just manages its currency terribly, people dollarize from the bottom up. They find ways to get dollars and other assets, and everyone learns you just can't hold currency and bonds in this country. And so that country massively loses a lot of its seigniorage. And then extreme examples, the nation state itself will give up and just say, okay, we're gonna use the dollar as our currency. That's happened to a handful. Bitcoin can do that to stronger currencies over time when it's bigger and more liquid. So we have a model in place, and we have this kind of long-term incentive to. There's really no reason to hold currency or bonds other than either one as the near-term working capital, like your checking account, basically to kind of pay bills in the current fiat era. It's like a hot potato. You use fiat currency, but don't really hold fiat currency. Or if you're a trader, sometimes it's a volatility reduction. That's why it's still useful, because it's stable, at least developed market currencies.
We often view central banks as neutral institutions, simply adjusting interest rates and guiding inflation. But in reality, they are far more powerful and far less impartial. Central banks have been the silent force behind wars, bailouts, and financial booms and busts for over a century. When governments borrow in a currency they can print, war becomes cheap. In World War I, nations had to abandon the gold standard to fund their campaigns, unleashing inflation and destruction. By World War II, the U.S. relied on massive bond issuance underwritten by the Federal Reserve. Since 1971, the world has operated under a fiat system backed not by gold, but by debt and promises, and the consequences have been global. From Iraq to Ukraine, wars are no longer funded by direct taxation, but by quiet, invisible monetary debasement. This system doesn't just fund conflict, it distorts how we live and think. Fiat money encourages short-termism and endless borrowing, discouraging saving and long-term investment. Individuals, corporations, and entire nations are pushed into unsustainable debt cycles. The value of your money silently erodes, showing up in rising food prices, unaffordable homes, and broken economic promises. And through it all, unelected central bankers control the price of money for billions, without consequence when they fail, as they did in 2000, 2008, and 2020. As Lyn Alden points out, fiat isn't a stable or neutral system. It's a tool of power, transferring wealth from savers to spenders, citizens to sovereigns. And history proves it. Of over 600 fiat currencies, nearly all have eventually gone to zero. That's not a bug. It's the design. Bitcoin changes everything. It's immune to inflation, cannot be weaponized, and isn't swayed by elections or policy shift. It runs on math, not manipulation. That's why it threatens the establishment. If enough people wake up to the reality that fiat isn't money but a slow-motion theft, they'll opt out. And as more opt out, it becomes harder for governments to fund the next war, the next bailout, the next lie. We're standing at a crossroads. Fiat systems are fraying, and the world is quietly seeking something harder, fairer, something that can't be corrupted. Bitcoin is that answer. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.